There we go, live on both of them anyway. So
Yeah.
now, welcome back everyone. Welcome back to the final episode of Value Investing Unleashed. We've got myself, Wes, and we've also got Josh as well on YouTube. So yeah, let's get on with it.
All right, then. First, we can talk about. Do you want to talk about China first?
Yeah, sure. Yeah. Yeah, Josh, do you want to lead off with China?
Okay. Yeah. I mean, it's just incredible. It just keeps on going down and down and down, and there doesn't seem to be no bottom. And again, like I said to you earlier, I don't know who's selling and why, because so many people have been scared out of companies like Alibaba, DD. It just, it's just remarkable, and the buying opportunity this is creating is just incredible. But I do think like China is going to be a huge long-term play, and it could go even lower. And I could see Alibaba not returning to the triple figures until the end of this year, if not next. But yeah, I haven't really investigated much of today, to be honest, around China.
Okay. So, which Chinese companies do you both own currently?
So I currently only own Alibaba at the moment, although I am eyeing up Tencent and JD.com, just due to the valuations at the moment, just unbelievably attractive.
What about you, Lewis? What Chinese company do you own?
Yeah, so I've only got Alibaba as well. Managed to get about $130 per share. So I'm just hoping it stays low for a while so I can load up on it because I do like it, these valuations. I do actually have a emerging markets ETF as well. It's part of my portfolio, and that's actually down 43%. I haven't checked today, so it's probably more. So I'm looking to load up on that as well when I've got more cash available. But what I'm looking at individually, I do like looking at JD.com quite a lot. I can't own Tencent on free trade through my ISA, which is a bit of a bummer. But if they did have it, Tencent would be another one I'd be looking at. But for now, I'm quite happy with Alibaba, my emerging markets ETF. Got to load up on them, cost average down. And we've had an internal discussion about Baidu as well. Which is it's interesting. I can't decide whether I like it or not, to be honest. I know Josh has some good thoughts on it.
I'm not particularly keen.
Well, why aren't you particularly keen with Baidu? Which for you guys who don't know, they are the Google of China. So yeah, why aren't you too keen on Baidu, Josh?
So for me personally, the growth's not particularly attractive. They have the inability to expand beyond the People's Republic of China. The firewall is a huge limitation in terms of its search engine business for me, and a huge lack of a diversification. I mean, where you compare it to the likes of Google, Google's got so many revenue services and it's continually growing, and it's a much larger company. It's got much larger growth rates. I do like the value of Baidu, but for me, it doesn't really appeal to me. And also, for me as well, I'm trying to limit my exposure to China, and it's not really worth the risk for me. It's an okay company, but it's not like an incredible buy like JD, Tencent, and Alibaba. I'd rather put my money in a different country, so I'm more diversified in that sense.
Sorry, Josh. They can't hear you because you're not in the Instagram live.
Oh, they can't hear me?
Yeah, because you're not on the Instagram live.
Oh shit! Hang on, how do I get onto that?
1 second. I invite you.
All right, hang on. I'll join Instagram live.
Yeah. He's joining. Accept. Yeah.
There we go. Yeah.
All right, then. Can you repeat what you said about China, Baidu, and everything?
personally. Yeah, the growth rates aren't particularly attractive. The firewall is a massive limitation, I personally think. It doesn't have the ability to expand beyond the borders of the Republic of China. What else? I completely gone back.
Revenue streams aren't diversified. They only have the search engine, really.
Like Google, when you compare it to Google, which is a similar company, the amount of revenue streams they've got is absolutely incredible, and they're growing at a faster rate.
That's very true. When I was looking at Baidu, I mean, they've kind of like trying to move away from just being a search engine company. So they've gone into cloud computing, they've gone into AI, autonomous vehicles. Do you think that can attract you to the company in terms of those other bets they're trying to get into?
I mean, the problem is those two sectors are already it's a very, very competitive market. I know that Google's actually got an autonomous driving company.
Waymo, that's the one, yeah.
Sorry about that. No, obviously, like, we're not going to know how successful, how good Baidu's self-driving project is going to be until the future. In terms of this AI business, again, there's a lot of players in it. And there's cloud computing again, although cloud computing is obviously very, very possible and extremely lucrative, but I don't know, it doesn't really offer any much for me, to be honest.
Right.
The growth rate.
Other Chinese companies.
The growth rate just doesn't seem there because of the firewall, because it's only a Chinese company. So Google's got everywhere in the world but China. Yeah, even though it's a low valuation, it doesn't necessarily mean it makes it a good investment for a long term. So that's why I've been like umming and ahhing looking at it. I was trying to decide, but when you see them points, you just look at it and think the ceiling of the company is so much lower than others. So yeah. It's a shame. It's a shame, but it is what it is. You just look at the next better opportunities, like the e-commerce companies, be it Baba, JD. I've got Tencent as well, but they're not e-commerce. They do everything over. So yeah, probably is better opportunities.
Yeah, I think now that we've like summed up everything regarding Baidu, I think we can definitely say that the three, like if you really want to get exposure to China, like the three main players are JD, Alibaba, and Tencent. So yeah, I think those are the ones you have to focus on really, because Baidu's not what we're looking at really in terms of what it's currently offering to us. In terms of what Chinese companies I own, I currently own 3. So I own JD, Tencent, and Baba, and I also own another one, Vips, but it's just in a different portfolio.
What does that one do, Wes?
It's basically they do like flash sales and stuff like that. So Tencent and I think JD has a huge stake in them. So they whatever Tencent and JD if they can't sell something, Vips will take their products off them and sell them for good price. But,
all right,
yeah, they're a fast growing company and good margin.
Chinese TK Maxx.
Basically, what is a good set of stocks to invest? The S&P index fund. Because we don't really recommend the stocks to people, because the way we invest, you need to understand why they go down, and when they go down, you need to know why it's good to buy. But if you're a beginner, just stick with the index fund first. I know that's cheesy or whatever, but take your time to learn about picking stocks, and when you're comfortable with picking stocks, then you can slowly transition into maybe a higher percentage of individual stocks to index fund. I would say Chinese eBay, like yeah. So if you're in America, you can look at is it VU and SPY as an index fund tracker, right?
Yeah, VOO and SPY. They're like
Yeah,
two.
and SPY, and UK is VUSA. S&P a double O. Word, thank you so much. Okay, but yeah. So, what do you think about the recent fear regarding Chinese stocks in terms of like delisting? Do you think they're going to get delisted? And do you think the fears out there right now are a genuine concern? Start with you, Lewis.
Yeah, I think. Do I see it? It's all news narrative. If you go back 18 months ago, Alibaba got to an all-time high of like, was it $320 or something? If
Yeah.
I'm something like that. No, it was 305. Just had a look. Anyway, yeah, we got $305 per share. The narrative behind the company was that it was the next Amazon. It was high flying. Suddenly, when a bit of bad news came out about the Ant Financial IPO not going ahead, happened, I think it was October 2020, something like that. Jack Ma went missing, the founder of Alibaba. The narrative just switched on its head. And since then, there's been all sorts of article stories, and the news sentiment has been negative towards China, Alibaba, all of these other companies. So the delistings all come from, since the narrative has changed, all of these stories for delisting, the VIE structure has all come about. So I don't think it's a risk personally. It's like people saying back in 2016 that Apple was a dead, dying company just because it wasn't selling any more iPhones or something. I wasn't investing in this, so I can't remember. But it's like in 2010, people thought Microsoft was dead. They always give it, and they always put a reason why the company's dead when the stock's doing rubbish. So you always get articles, whether it's positive, euphoric, or negative and down. You get different articles depending on what the stock's doing. So yeah, I'm not worried about that at all. I just see good quality businesses at a fair price, not even fair, but a cheap.
more than a fair price.
Fair now. It's cheap. So yeah, that's my thoughts on it anyway.
Yeah, I think as an individual investor, you just gotta take yourself out of it and not focus on the news so much because that will drive you crazy. What about you, Josh? What do you think about all this delisting, VIE, Alibaba going down at 50% and everything like that?
It's been going on for almost a year now. Like, I personally think with Alibaba and a lot of Chinese companies, risk outweighs the reward. There's always going to be that risk that it gets delisted. That's granted, but then again, it's always available on other exchanges such as the Hong Kong Stock Exchange, and it will continue to be public on there. I also think as well, if the CCP did delist Chinese stocks off the New York Stock Exchange and the US exchanges, they'd only be shooting itself in the foot. These companies provide massive amounts of revenue to China. And I think they have a program where big corporations in China, I think Alibaba and Tencent are on there, where they have to fund startups. So obviously, that's huge for China. Now, and also there's an element of power of the Chinese companies to be compete with the American ones. And it's a medium of influence, if you will. So personally, I think the risk is it's still there, but it's really high. I'm going to continue to buy. I could be wrong, but I'm very confident that Chinese stock market personally.
Yeah, I completely agree with both of you guys. I think the way people paint the narrative about, there's always a chance in everything, but I think people have just blown it out of proportion. They've literally just overhyped the delisting, like Alibaba won't prosper and all these things. So yeah, I just don't see don't see like the fear that people are seeing right now.
100%.
Yeah.
Yeah, it happens with stocks. Like I said, Apple in 2016 when Warren Buffett bought, I think it was a P ratio of 10. He bought Apple at Microsoft 2010, P ratio of 9. It got to. It happens. It happens with different companies at different times. At the moment, I'd say Intel's a big example. What other companies? There's many
Facebook.
companies. Facebook, yeah, Meta right now. It happens. So yeah, you get negative news, negative sentiment, but in my eyes and our eyes as well, it's a buying opportunity. The way you outperform in the market is you buy like great businesses at fair / cheap prices, and yeah,
Yeah, and businesses don't become cheap when everything is all sunshine and rainbows. They become cheap when everything is depressed and down and gloomy. So yeah, if you're not outperform the market, you have to just think: is the situation being blown out of proportion, or is there legitimate threat to the business? And yeah, that's how people like Warren Buffett, Howard Marks, Charlie Munger have performed. They've bought companies where the outlook doesn't look so good in the short run, but over the long run, the businesses overcome these issues and then they get these huge rewards. It's kind of like you have to be a contrarian in a way, and you have to take the short term pain and for the long term gains.
100%. Yeah, the stock Alibaba might go to $50 per share or even lower. Who knows? And we'll be all down quite a lot of money by then. But
Yeah.
if the intrinsic value's a lot higher than that, from what we calculate, then yeah, you just got to roll with it.
Yeah. Do you think Charlie Munger will buy again?
Definitely.
Yeah. So I read a lot about valuation stocks. Yeah, I think he'll. But I think. Do you think Warren Buffett will buy?
No,
You don't.
I don't think so.
Even at these prices.
He stays in America.
But he has BYD though. Petrol China as well. Yeah.
All right. He rarely invests out of America. Like I've seen on our WhatsApp that one he invested in Tesco. He sold when they had accounting fraud. Literally when that came out, he sold all of it. And he owned Guinness PLC in the 1990s before it became part of Diageo. He loves America. I guess it's what he knows. He really likes it. Not his odd company and stuff. But yeah, I think Munger's a bit more willing to go a bit further. So different investors do different things, I guess.
Yeah. Yeah, I agree, and it's interesting, really. So I read a lot about valuation of stock nowadays, and besides psychology, today big boys do not trade themselves so much. I think in investing it's so important to have the psychology down and not, let things spook you easily, because it's scary having Baba and it's down so much and you're constantly thinking, am I wrong? And then you end up doing something dumb like sell when the thesis is still the same.
Yeah, you've got to train yourself that the stocks you like and the stocks you own, when they go down, it's actually a good thing. You've got to train yourself mentally that it's a total mindset thing, that when they go lower, you can buy at better prices. So over the long run, you're going to do better.
What's the other topics we were going to discuss
Sorry?
again? What are the other topics we were going to discuss?
So my portfolio and what was the other one?
What makes a good investment? So
Yeah,
I guess
what
what
makes a good
stock
investment?
or
Yeah.
something, yeah.
Yeah,
Which one shall we go with?
So after we can talk about what makes a good investment. So, do we have anything regarding China, Alibaba, Tencent, JD?
Nothing to add.
Yeah, yeah. It seems to me everyone loves talking about it. Like every time the stock dips like 10%, 20%, like old news seems to come up, even though we've known about it for about a year now. But yeah. So, what makes a good investment in your eyes, Lewis? Because for me, right, some people think a good investment is buying Apple, Microsoft, Amazon, all these flashy companies, but you have to ask yourself at what price did you pay for them? Because for me, you can buy a good company and it's a terrible and it's the worst investment of your life, and then you lose everything because you paid a high price. Or you can buy a really average, crappy business at a low enough price, and it's probably the best investment of your life. So, yeah, what is your opinion? What makes a good investment in your eyes?
Yeah, so point one for me is valuation is the
Hmm.
most important. The lower you buy, lower you buy a investment slash stock or anything, the
Hmm.
higher return you're gonna get. That's the first and foremost most important thing. Whether you're investing in Apple, Meta, or you're investing in like a unknown company, run down a bit, maybe a Foot Locker that we've discussed before, maybe a
Mm,
Sprouts Farmers Market, and one you've got Wes,
mm,
something a bit more unknown. Valuation is the most important thing first, and then after that, once your valuation box is ticked, I like to look at the quality side of things. So there's a few different metrics I look at, look at the profitability of the business, net margins, gross margins, return on equity, how much debt the company's got, free cash flow growth, profit growth, and then capital allocation. So what they're doing the cash when they generate it. If they're buying back shares, if they're paying dividends, if they're acquiring companies. If they're acquiring companies, was it good or was it a waste of money? All that side goes into quality. So number one, valuation, and then number two is look at the quality side of the business.
yeah, I completely agree with you, to be honest. What about you, Josh? What makes a good investment in your eyes?
I mean, I'm going to just reply to all of this. One thing I might add though to that is when I look at a business, I also have my current portfolio. So I'll say this earlier about radio, which went great. I'm a big believer in it. If I look at a company and it's an absolutely fantastic one, when I have a look at its correlation, it's got an incredibly high correlation with other stocks I own. That's going to be something that's going to incredibly put me off. So what Lewis said, I'm not going to say again. And also, I'm looking for companies with low correlations across my portfolio to reduce my risk and increase my returns as a result.
Mm,
I think as well, I'm looking for good leadership and obviously a solid brand. I think previously one of my big mistakes was looking at companies just from a measuring growth point of view and just looking at pure value and not looking at the elements of it. So I'm also looking for good management, good leadership, recognizable brand, etc.
yeah, I completely agree with you. Those are some very good points you raised right there. For me, obviously valuation matters. I like good capital allocators, so what they do in terms of like setting aside money for future growth, buying back shares, being responsible with the money that they have. I also like the business has to be good quality, so they must not have a lot of debts or all that bad or issuing a lot of shares that or yeah, that's it. They must have high return on invested capital as well. I like them, over 10, 15, 20%, because it shows that they're doing a good job of allocating cash for future growth.
Just one point there, mentioned about diluting shareholders.
Hmm.
What do you think about, because this is an interesting one I was thinking for myself, is what happens if they're diluting shareholders in order to make an acquisition?
Oh,
It's a good question, that.
okay. So if it's just a one-time thing, I guess it's okay because sometimes a business will do it once, but later on they buy back their share. But if they're gonna keep doing it afterwards, then that's an issue. But if it's like, if they're like transparent with it, we're gonna make this acquisition that we think is gonna benefit the business, but when we're like, steady and everything, we're gonna buy back our shares afterwards, then I would accept that.
Yeah, trying to think of an example. British American Tobacco did it a few years ago. They acquired Newport cigarettes, I believe, so quite a big American cigarette brand, and they used debt and issuing shares to do that. And by doing that, they grew their revenue by quite a bit. The debt grew a bit as well, a little bit of shares, but the business has got more efficient because of cost saving efficiencies, and it's made them more profitable. So that's benefited them as a one off. I think if a company's going to do it, if a company is overvalued and they issue shares, that's, let's say, Nvidia, right? We all think it's overvalued, surely.
Not a lot of people do. They think it's a bargain right now because it's at a really lowest valuation it's been.
But yeah, let's say Nvidia wants to acquire a company. We think it's overvalued. That's a great thing for Nvidia to do. Their stock's really overvalued. They can sell not a lot of stock, so they don't have to give up a lot of ownership of their business to acquire maybe something which can help them grow something. That's could be a good thing, but it doesn't necessarily mean you have to go buy Nvidia because they've done that. Because that could be a good thing for Nvidia to do. Tesla have saved their business by doing that. Let's be honest. Well, not acquiring, but issuing shares. It's saved their business because the price has been so high / overvalued that they can issue less shares to get quite a lot of capital in. But yeah, so.
One thing I don't understand, I mean, this is quite a complicated point of view, but when you have these overvalued companies like Tesla, Nvidia, etc., I don't understand why they're not issuing shares like crazy. Because you just got a whole load of I'm trying to think of a nice word to say. The stock is overvalued, so why don't they issue shares, make acquisitions, make investments into the company, and secure a stronger future? Because the stock is not going to be this valued forever.
Yeah, like Tesla, when it comes crashing back down to earth, whenever it happens, how are they going to finance their business? Because when it eventually does go down, getting capital by selling over expensive shares could be quite difficult. So yeah, they need to just keep on doing it as quickly as possible.
I mean, with the Tesla shareholders, they wouldn't care if Elon issues loads of shares tomorrow. As long as they own the company, it's fine.
They'd think it's a good thing.
Yeah, I mean, that's it.
It could be for them.
It's good for Tesla, for company, but not for the shareholders.
Yeah.
I've got a question for both of you about the whole what makes a good investment. Then I've got a question for Josh as well. So I'll start with Josh. So let's say the correlation side of things, like you brought it up. Outside of this, I'll ask you what's a good website to look at correlation, because it's something I'm quite interested in. So let's say I think two businesses which have a duopoly is MasterCard and Visa. So I personally think them two are fantastic businesses. Visa and MasterCard. We've got a duopoly over the card payment processing, whatever. Very dominant, high quality businesses. Lights moving. Yeah, both of them. Yeah. So I personally prefer Visa, and I want to own Visa quite a bit lower price. But yeah, let's say if both of them came up at a good value, you'd pick one and not the other, because because they're very similar, I'm assuming they'll be quite correlated.
It depends on what you have. So for instance, let's say, let's say you want to invest 10% of your portfolio into sort of car payment systems. So you have one option is investing 10% into Visa or 5% into Visa and 5% into Mastercard. Like, it's not going to make much difference, and in fact, it will probably be better to split the money between the two, because you're not going to have a one-to-one correlation if you would just invest in Visa. That makes sense.
Yeah.
So you're diversifying to a very extent. So that's what I think would be the best option. But obviously, if you're like, well, I invest 10% of Visa and 10% of Mastercard, then that's a different story. But yeah, that makes sense.
Yeah, that makes sense for sure. Something I do in my portfolio is I categorize each company I own via the Morningstar sector. So I think it's about 11 sectors. So let's say I go through them all, and I've labelled them all which sector it is. Let's just say it's not all tech, it's not all industrials. It's quite varied what I want to own. So I'm going to do a bit of a task, seeing what the correlation is like with that, because it's quite an interesting point.
It's fascinating. I mean, I was doing my dissertation on it today, which is expected what returns from a mathematical perspective, and it's honestly fascinating. Ray Dalio was the one that coined it, and he did it in his book. I can't remember which book it was. I'll send it to you at some point. But it's honestly fascinating. So if you get a chance, it's only a 3-minute video. He explains sort of the correlations on the graph and how it affects risk to reward ratio. So it's really worth investigating, I personally think.
Yeah, interesting. Very interesting. Yeah. And my last question, well, for both of you, is what makes a good investment? So we've spoken about valuation and quality. What's major red flag? Like, we've spoken about issuing shares, but what's a red flag? Because my red flag is issuing debt to buy back shares. I hate it. Starbucks do it. McDonald's do it. And if I see that, Unilever do it as well, to buy back shares and been issuing a lot of debt. Oh, it does my head in. Literally, I put it in I have a list on a spreadsheet called the bin pile. And I put it on there, and I just put, never look at this company again, because that is just the biggest red flag. Issuing debt to buy back shares, for me, that's just a big no.
I think Sleep Numbers does that as well. I'm not sure.
I would say issuing debt to pay dividends is probably works.
Oh, yeah.
I mean, another thing I'd say is if a stock's in the limelight for no apparent reason. So when stocks are really popular, that's when I might not touch it.
So you're not buying Tesla?
Yeah, I completely agree with you. I mean, if I see a stock all over social media on those infographics, 10 stocks to buy now that will quadruple your money, I'm like, yeah, I'm not touching that. So, yeah, I prefer to invest in like companies where they're not in the limelight, nobody knows, unless you invest the same way as me, kind of thing. Yeah. And my portfolio is basically that, apart from like, your 2 or 3 that everyone knows. But other than that, no one knows anything what I own. So yeah, also having huge debt is a big problem for me. I'd actually avoid the company can be at the best valuation ever, but if they have huge debt, I'm avoiding it straight away. It just saves me the headache, really.
Yeah, I totally get that. Yeah, I think what company's got the most debt in my definitely British American Tobacco.
Really?
That's probably the one where it's on the edge of me thinking yes, no. And a few reasons I've done it is because it's still at a low valuation, but the amount of cash they throw off is a bit ridiculous. But yeah, the amount of debts from like an AT&T, Verizon, VW, them companies have. They've got more debt than some countries, and it just makes me it's mental.
Yeah, I completely agree with you, especially AT&T.
That's such a bad business. It is shocking. It is not good at all.
But it seems to me that they're trying to turn a new corner right now. Like
I just wouldn't trust them, Wes, honestly.
you don't.
I wouldn't trust them. They've got different management. For the past 10 years, they've been acquiring. And when you look at the big write-offs they've had, the amount of the shareholder value they've been destroying through that. Yeah, maybe it's turned the corner, but just don't trust them.
I mean, they've destroyed shareholder value, but the people holding it for the dividend, do you think?
Buy
I don't know.
S&P 500, you do better.
Yeah.
You know what I mean? People
Yeah.
just. We could have a full episode talking about dividends and how people get shiny penny syndrome. I think we should actually.
We actually should. I mean,
I hate the thought of just dividend investing. It does my head in a bit. I hate it.
I think you shouldn't own a company because it pays a dividend. You should own it because it's gonna, provide you some sort of value. Like it's gonna provide you good, steady growth over a long period of time, attractive valuation. Like no matter if you're being a quote unquote dividend investor or growth investor or small cap investor, whatever investor you define yourself as, you still have to factor in value into your method. So yeah, like you shouldn't own a company just because it dishes out a dividend. You have to consider a lot of things as well. What do you think of dividends, Josh?
Dividends are like, I'm just doing your correlations in your portfolio. Personally, for me, I just don't understand dividends. Like, why would anyone pay dividends when they buy back shares, just like from 4 cents? And the thing I don't like about dividends is it's like, it's like you're almost like required to pay out dividends every year. Now, if you ever read one really bad quarter, and that leaves you on your, like, incredibly poor £3 bonus elsewhere, that's horrendous. I don't like that option. I'd much rather a company buy back shares when they feel like they can, and then when they do have a really good bad year, it doesn't matter. There's no obligation to do that. Dividends are enough, and I won't complain about it, but I personally think share buybacks is just so much money.
I totally get that. And in theory, they are both the same. You're just returning capital back to the shareholders in one way or the other. One's more efficient, share buybacks, of course it is, because you don't get taxed twice, corporate and personal level. I agree as well with the whole dividends feels like an obligation. It feels like management is got handcuffs on and they have to do it every quarter. Whereas share buybacks is like, oh, we've got a bit of spare cash, let's do it. Whereas it should be done a lot more strategically than that. So let's say Meta at the minute, I really hope Zuckerberg's going to put some cash in buybacks. Please buy back some shares at these prices.
I would be so pissed if he starts dishing out dividends and just go heavy on the share buybacks. Like buy like 10% of the market cap or some shit. 100%. Yeah.
I'd rather have a company. I think sometimes they pay a dividend because they don't know what to do with the cash. Because you look at someone like an Apple, and I don't know what the dividend is, but they spell so much cash, they're just like, oh yeah, go on then, let's keep the market happy, let's just give them a bit of a dividend. Don't necessarily mean it's the right thing to do. They just do it because whatever, they've got enough cash to do it.
Yeah, exactly. And I think with what you said, with dividends, you must pay the dividend if you're a company. It's put a lot of companies in trouble, like AT&T over the years, hasn't it? Where
Coca-Cola.
Yeah, Coca-Cola as well. Yeah. Where even Intel as well, like the old CEO, like, they've been focused on share buybacks and dividends, that they forgot about the growth part, and they slightly fell behind, like AMD and Nvidia. But now they've got a new CEO, and they seems to be, more focusing on the growth instead of like current like shareholder value. So I think it's important you don't completely destroy your company by feeling obligated to issue a dividend. Because
3% yield.
Easily. Like, I think they're building a
It's Ohio, isn't it?
One in Arizona and one in Italy.
Yeah.
$20 billion in, isn't it? Something like that on the new factories.
Mm.
What have we got? 3% yield, isn't it? So what's the market cap of Intel times 3%? Because that's what the dividend is.
Let's see.
That's a lot of cash.
Yeah, Intel's market cap's 181 bill.
Yeah, I think you're right about Josh. Yeah,
Mm.
that's a lot of cash. $6 billion.
Yeah.
They do have a good history of buying back shares over Intel, don't they? Yeah.
No. But yeah. So, do we have anything to say regarding what makes a good company and dividends and stuff like that, and what makes you completely ignore company?
Yeah, I think in summary, valuation is most important thing, number one. And then number two, look at the quality side of a business based on what criteria we deem as high quality. And yeah, there's a few things I might add to my quality process. I think we're always learning now as well. Like these things you'll pick up where you'll speak to other investors. Like I might speak to you, Wes, about all right, okay, I don't really think about it. I might add it to my process. I think that's always good to do. It's never this is what I'm going to do. This is set in stone. I might pick a few things up and go with it. Somehow I want to add something into my process of analysing management, but I just don't really know. Doing it a numbers way is quite difficult. That's something I would like to do, but yeah, quality side is important as well, because just because something is cheap valuation doesn't mean it's any good. So
yeah, I completely agree with you on that one.
Sorry.
No, it's all right. What we can.
Was it 6 billion?
yeah, 6 billion. Yeah, a lot of cash.
Into research and development, because they're behind Samsung and TSMC in terms of like CPUs for around nanometers per transistors per nanometer or something like that.
I want them to IPO Mobileye and use the funds to just go full ham with R&D and factories and stuff. Like, I really hope to do that, because that Mobileye is meant to be worth quite a lot. And if you can use some of the proceeds, if they do list it, use some of that for loads of R&D and factory building, that'd be fantastic. Yeah.
I think I read something that is what they're going to do, actually.
Oh, really?
I think I read somewhere. I could be wrong. I'm not sure. I think I read it somewhere.
That'll help us out.
Yeah, definitely.
For keeping the dividend to keep the market happy. Like, I know it's ridiculous, but these companies are like, oh god, if we get rid of our dividend, our stock option prices will be crap. And they do think like that because the management and employees, whatever, get paid in stock options. So they want them to be worth more in the future. So
This is why
he's so good, isn't he? He's so good.
Well, I was reading because I was wondering why does Berkshire Hathaway never have the stock split? And he was saying like he wants to keep the stock price high to reduce volatility. And then also he's got the other more successful Berkshire Hathaway stock, which is absolutely fine. But it just makes so much sense that he doesn't issue dividends, just does share buybacks.
Clever, isn't it? Yeah. You know, the Berkshire shares is only 70 traded per day.
70?
Because the share price is like $420,000. So there's only so many big dogs that can buy it.
You have to be in like the elite members to to
Yeah,
buy Berg
they do.
A.
And when you set, I think even buying them is it's very, very difficult because they always want you to go for the B shares. That's my best performing. I bought it shit after the pandemic. Berkshire B. I was pretty happy with it, actually. I'll pat myself on the back.
Would you buy it at this price? Current price?
Oh, that's a good question. If I didn't own any, I probably would. I actually think it's worth way more than the current price.
Yeah. What about you, Josh?
I've seen research on the company itself. People have split apart the business and valued it like that, and it's a lot more valuable than what the market cap is because it's got conglomerate discount. So if the railroad was a public company, if the insurance company was public, the stock portfolio, yeah, I think it's even solid now. But you want to buy it lower, of course you do.
Yeah, that's true.
I personally like the stock. I mean, the problem I have with Berkshire is just lack of understanding because it is quite a complex operation. And they have so many businesses and they don't really own all of them. But I do agree it's probably a lot more market value, is it?
Yeah.
I personally think it's an index fund, but better. Even when eventually Warren Buffett and Munger aren't here anymore, literally that company, their roles are going to be split into four. Well, it's four people that will run the business. Greg Abel, Ajit Jain, then Todd and Ted. So you've got Ajit looks after insurance, Greg Abel looks after energy, he'll become the CEO. And then you've got the two portfolio managers, which will end up managing the full stock portfolio. And then four will do their two jobs. And there's such a philosophy there that even when they're not here anymore, I think it's going to continue.
Yeah.
Like, they've got that mindset and mentality that we're going to have all this cash coming in, and I think they'll be absolutely fine. It's not just going to erode overnight, is it?
It'll be interesting to see what happens when Buffett passes away, whether the sort of stock can go down like 10% or something like that.
Probably will. Probably. Yeah. Good buy up, morbid, but it's a good buy opportunity. But yeah, I think it'll be absolutely fine. It's just a compounding machine, index fund, but better.
Yeah. And they've got a lot of cash as well, so like no one knows what they're gonna do with it. Obviously to buy, but we don't know what they're gonna buy.
I'd love it to buy better. If Meta got cheap enough.
I mean, at this price, it's probably cheap enough for him to, to buy it. But yeah,
I think Alphabet is what. I think Alphabet's one that if it got cheap enough, I think they'd be like, "Go on then, let's have a look at Alphabet."
Yeah, I agree.
It's such a staple.
I think I've read somewhere that he really likes Alphabet, and that's the one company, he wants in his portfolio. But obviously, it's not cheap enough for him right now.
Yeah, if you got to a P of 10 or something for whatever reason, yeah, would be all over it, 100%.
If it got to purish of 10, by then it would be dead. So even though, and everyone will be like, no one uses Google anymore, even though you literally just Googled.
Who uses Google? We all use Bing. We all use Bidu.
Yeah. It's like with Facebook, right? I literally see on Instagram comments, literally no one uses Facebook, and then you're using one of their products. Like Facebook is ingrained in our lives. Like you can't get away from it. Like if you don't use Facebook, you obviously use Instagram. If you don't use Instagram, use WhatsApp. So it's literally ingrained.
The social medias that you can use other than Facebook, like really Snapchat.
Yeah, Twitter's rubbish.
Obviously, you've got WeChat, but apart from that, nothing.
Exactly.
Yeah, Snapchat's for people under 25, and that's what my audience is. I think Facebook would love to buy Snapchat even now if it got to a really cheap price. Twitter, I don't really think much of Twitter. The financials are crap. they've been around for so long. How haven't they got a good, profitable business? If Facebook's got really good margins, why doesn't Twitter? I just don't understand it. It annoys me actually. I'm like, why can't your social media company have, better business? What do you think, Josh, about Twitter? Have you seen their financials? Because I think they're rubbish anyway.
I haven't, but I used Twitter when I was president of the Labour Society at my union.
Oh yeah.
That's not because of a woman.
Each their own.
Yeah, like there's a problem I have with Twitter. So I don't think it's over the discussed. I could be wrong, but that's the only way I can Twitter is just I could be wrong.
Yeah, I know what you mean. I do get what you mean. I look at the numbers of it.
It doesn't even make money, do they?
It doesn't make money. How doesn't a platform like that make money? Seriously, it makes losses. How?
Do you think? Oh my God.
Stupid.
Like,
With
what's
all
the
that attention, if you want news, you usually go to Twitter first. You'll find anything out right now on Twitter. We've got hundreds of millions of people on it. How haven't they made a profit? It's stupid.
Their market cap is 26 bill. I mean, Facebook can, afford that.
Tell you what, Zuckerberg. Well, if antitrust will let him, but Zuckerberg will be like, "Come on, then." On his wakeboard, he's like, "Come on, then, let's buy them all up."
I mean, Twitter literally does not make money. Like, do you think there'll be a time where they're on the brink of, bankruptcy or something?
They'll keep afloat as long as interest rates are really, really low and you can issue shares. They'll stay around. But I honestly think that if Facebook got held at Twitter, they'd make them profitable within a few years. They'd just load it with ads and it'd just work. Yeah. Zuckerberg's such an underrated capital allocator. It's ridiculous.
I agree. Yeah, I agree. But,
Instagram for $1 billion.
That's insane. Like, he actually got a lot of hate for that as well when he bought Instagram. Like, it would never work. And then look at it now. It's like the most popular social media currently right now.
Snapchat, $45 billion. They could have that as well, actually. Yeah, it's way too much. Doesn't make anything. Yeah, probably need to be half of that.
Oh, Pinterest, that's the other social media.
Oh yeah, Pinterest.
Now that's one I don't understand at all. I don't get it. I don't get why people would spend a lot of time on it, but I don't know. But
mostly for like home renovators, isn't it? Like Pinterest. Yeah. But Reddit. Oh yeah, that's meant to IPO as well this year.
Oh really? Oh, cool.
Yeah.
That'll be a meme stock, isn't it?
Yeah. Let's see. They only make 5 billion in revenue. Twitter. How long have Twitter been public for? Since 2014, and they're below their IPO price. Yeah, you're right.
Yeah.
Yeah, and they're below the IPO price. Imagine.
I just don't get how they don't make profit. The cost of sales is really low as well. Like. No, go on.
I was going to say, I mean, one big difference between like Facebook and I mean the actual Facebook itself and Twitter is a lot like Facebook's got so many features. Like you've got Facebook Marketplace.
Yeah.
A lot of small businesses use Facebook to advertise and stuff like that. No one goes on Twitter and advertises. Obviously, you've got Facebook Messenger as well. That's extremely I use that all the time. I don't know. I think like Facebook as a platform itself is so much more diversified than Twitter.
Yeah. With Twitter, they're trying to get into like the content creation now. So on Twitter, you could like donate to like your content creator. You could donate to like journalists. Get that subscription models and stuff like that. But
yeah, Twitter needs to load it with ads. They need, if you've got a Twitter thread, every other tweet on your thread, they need it as an advert, because if people aren't seeing adverts, they're not making money. And I notice on Twitter, I know we all hate adverts, but that's how they make any money. Like on Instagram, you'll go through your stories or you'll have a look and you'll see an advert. It'll just come up and you either skip it or whatever. But Twitter just doesn't seem to optimize the adverts as much as we could do. And that's how we'll end up making profit. If people are spending time scrolling, they need more adverts on it. But as you say, Josh, the advertisers might not be bidding. The advertising might not be bidding the adverts up like they do on Google and Facebook, and that's why they're not worth as much. So yeah, I just don't like. Yeah, it just annoys me how a social media company can't make profit after seeing Facebook. I don't know. Jack Dorsey, yeah, prefer it to Square, Block, whatever you want to call it. Yeah. It was Square. Square.
Was it just Square?
Yeah, Elon had something to do with PayPal. Yeah, Square, but it's called Block now because of the blockchain and all that. Yeah.
But even with Square, like, I look at it and I don't see anything fundamentally good with it.
Me too. I just look at it and think, PayPal's better.
Exactly, like in every way. I mean, but with Square, it's more hype and exciting because Bitcoin and blockchain and stuff like that. Like, where's...
I'm seeing a lot, like every time I go to like small cafes where I'm doing stuff, I see a lot of machines people on
Square Terminal, yeah.
It's not a huge business.
You don't see them in the big businesses, though, and that's what concerns me. You do see them in the independent ones and stuff. That's great, but you don't go to Primark and see Square Terminals. You see whatever. I don't know what they've got, but yeah.
And also, you've got but there's so many opportunities. Like now you've got like Apple, they do Apple Pay, and obviously don't they have a technology you can attach to an Apple, well, an iPhone now.
Yeah, you've got something called iZettle, and you've got stuff like that. Other ones as well, where you can just put it in your iPhone and it does it all for you. So it's not even complicated. Like if you're a tradesman, if you're a plumber or whatever, and you don't want to do cash, you can just bring your little machine near your iPhone and it does it for you. So that's competition, isn't it?
I love PayPal. I'm so tempted to buy it.
I mean, the price does look attractive right now, doesn't it?
I mean, I'm with you. I went to the Everything Money algorithm and I got like $18, but I'm willing to pay a bit of a premium for it because I just think it's such a fantastic business.
Yeah.
It's got, reputation, like, I could ask my grandma what's PayPal, she'd probably tell me, I couldn't do that before. So that's what I'm attracted about it. And I do think, what's the word? Well, I think PayPal's going to be around for ages.
Yeah, definitely. I think, right now they're going through a rough patch, but I think they'll be fine over the long run. I mean, they've got so much cash and they've basically got zero debt. And yeah, they're just a fantastic business fundamentally. So I could see them being around for a long time.
I'd love to own them and Visa.
Oh, that would be solid.
Yeah, I like Visa a lot. I think 150 was my price for Visa.
Was it currently 220?
Yeah, let's have a look. Something like that. Oh, it's at 200. Oh, 25%. Yeah. Well, for Wes, is it 200? Yeah.
I think I did a valuation on them. I can't remember my price for it, but
Paytm though, as a business.
Oh
Is that
yeah.
the Indian PayPal?
That's it. I mean, like, when I was having my crisis over summer, I decided to learn Hindi, and I went on this website where you pay by it was like £3 an hour to learn Hindi. I only did one session, but I ended up talking about Paytm. This person was like showing the whole time, and it is just amazing all the things you can do with Paytm. It's really similar to WeChat in a sense, in terms of navigation. It's so attractive, and Butter has a share of it as well.
That's interesting.
Yeah, but currently it's dropped like 50%. The only thing I don't like about it is on the national stock exchange in India, which I don't have access to. On trading 2 which is restricting. But Oxford University, if I change broker, that's something that's really interesting.
Yeah. Oh, it's fallen a lot. Paytm.
They had such a horrible IPO. It was absolutely brutal.
Why did they drop so? Are they profitable?
No.
Oh.
Not yet. I don't know. It needs more analysis, my personal opinion. We need to make a decision on it. You know, India, growth rates in India, obviously the middle class is rising exponentially.
Paytm is down 70% since its public listing. And it got listed this late last year, November. Damn.
It's been absolutely brutal. Again, it's a company that I want to investigate further. In the long term, I'm very bullish on India, and I think having access to like companies like that, and then is it Hindustan Unilever, which is Unilever's branch in India?
Yeah, there's Reliance Industries as well. They're another player. They're, I think, India's biggest company. I've looked at them before and thought I think I'd like to own them at a good price. Yeah, I know Google and Facebook have invested in geo payments. Yeah, I think both of them are. So I think a lot of these companies are trying to get into India via buying a little bit of these companies to get a bit of a foothold in, because it is the next. It's going to be a big frontier, isn't it? Because it's democratic, it's biggest population in the world. So yeah, it's.
I was going to touch on the population projections in the country, which is absolutely like too big for a country.
Yeah, that's crazy, isn't it?
There's a few companies I like in India, like Infosys, the IT company. They're solid. That's the one company I'll literally go ham on if it ever gets cheap. I really like it a lot.
What was that one again?
Infosys, so INFOSYS.
Okay, yeah. What's up there?
Yeah. IT firm in India.
Oh, you know Rishi Sunak?
Oh yeah.
His stepdad. What company does he like to be on?
Can't remember. I know he's.
Sorry. I can't remember which company it is. I was going to check one second.
What company? Is it a bank? Is it what?
It's an IT company based in India. I think he was CEO of I can't remember.
Yeah, that's quite good. Does that work? Yeah.
Yeah. Yeah, that's Infosys is. I want to own it. I think at $15 is my buy price.
Yeah, it's recently. Well, not recently. Basically, since the start of the pandemic, it's gone it's rocking it up.
Yeah. Yeah, there's also a few decent banks as well in India, like HDFC Bank. There's another one, I can't remember what it is.
Yeah, I wish I could buy Kiwi,
Oh yeah, yeah, Kiwi.
but it hasn't traded since
For a month now, isn't it?
a month. And it's
Oh.
gone off free trade. I don't know if it's gone off trading 2-on-2 because you can't buy it. But it was a PE ratio of 2.
Yeah.
RIP Kiwi.
Oh,
The Russian bear pal.
it actually looks solid as well. I mean,
But I couldn't buy it in an ISA as well. Gutted.
you could have.
Couldn't. No. I think I would have bought it, you know. When we were looking at it, I was like, all right. I might look. Yeah.
Sorry, back.
Did you find it?
White Pro.
Oh.
I think it's White Pro. What was the company you just said about being $50 as your...
Oh, Infosys.
What was it, Infosys?
Yeah. Yeah.
If HDFC has invested in it, eight names ago, and ICICI Bank.
Oh yeah, that's another good one.
I mean, problem is that I think India's a bit dodgy for financials. Like, I could be like, I think there's such a lack of transparency into like with American banks. You can look at their 10K reports, and even then, it's still a bit. I don't know. It just puts me off a little bit. But like HDFC Bank, their growth has been absolutely.
Would you own them again? HDFC.
And understood sort of the culture, etc., then I'd consider it. But for me, it's just lack of transparency that's the issue. I'd probably rather hold a ETF that just covers Indian banks rather than hold individual Indian banks.
Yeah.
Because a big scandal, I can't remember when it was, whether it was in the early 2000s, or something that happened with the Indian banking system, and it was absolutely like horrendous.
Yeah, banking and insurance isn't something I really understand, so it's something I kind of avoid. I bought Bank of America at the start of the pandemic because I managed to buy it for less than net tangible book value. And if I was going to value a bank, that's how I'd do it. So if you can buy the shares for less than the net tangible book value per share, then in theory, you're buying the assets for less than what it's listed for. So I did that, and then I did eventually sell it. But from then I was like, I think I need to learn a bit more before if I went back into banks and stuff. Yeah, I know Canadian banks seem to be quite popular. Well, popular is not the right word, but well run.
Yeah.
Yeah, there's like 4 or 5 banks which are absolutely massive, like proper global banks and stuff. But so I don't know too much. But
yeah. Bank of Montreal.
Yeah, there's a few of them. There's Royal Bank of Canada, Bank of Montreal, Imperial, TD, Toronto, Dominion. Then there's Bank of Nova Scotia as well. Yeah, there's a few of them. Better than the UK ones, let's just say that. They're crap.
You're not a fan of like Barclays or anything like that?
Yeah.
It's because they rejected me for my internship. In fact, they literally would, but I don't know. Again, I find it so difficult to understand banks. If we had like another 2008, then I'm really getting excited about it. But it's just so hard to understand.
The risks, like on the balance sheet, the derivatives and stuff which aren't even properly, you know what I mean, not properly on there because the way it's accounted, you don't know what risks they've got and stuff. That's what worries me. Just the risk side of banks and insurance that you don't really get from just looking at the numbers. You see your bank's financials, they don't really have free cash flow because of the way their numbers work. It's just a bit strange. So, like I said, I have to learn a bit more. If you buy banks with less than net tangible book value, you're onto a winner. Yeah, but so I can't comment too much. I don't really know too much about them.
What about insurance?
Complicated.
Mm.
That was like some of the first things we considered. Insurance companies that have loads of cash around. I can't remember the time period he was president, but for that specific time it made more sense. But it's just so complicated. I'd rather invest something that I easily understand.
Yeah, 100%.
I was going to say, we talked about this. I into a correlation matrix.
Oh, let's do it.
All right then. Let's get onto my portfolio.
So it's all into what is it? All into tech stocks, all into EVs. Is that what it is? Wes?
Dissertation. I'm doing an example. I'm using the market vests and looking at their correlations, and it's absolutely horrendous.
Really?
Yeah, I mean, I was on the phone to my advisor, and I was telling him about it, and he had no idea about it, and then he looked at half of their stock, and then how much he dropped by. He's like, oh shit, and then right. So it's going to be really awkward. I'll put the screen. Yeah, that's going to be really hard. Do you want us to read you out
Okay, so
Can we just read you out the ones that stand out?
Yeah.
Yeah.
So, for instance, your Alibaba one is so good because your highest correlation is with Tencent, which makes sense, which is 0.6, which is really high. But the next highest is Facebook at 0.13. That makes a lot of sense. Facebook, for some reason, has a really high correlation with the kind of schools at 0.64, which doesn't really make a lot of sense. Tencent against high correlation with apart from that, the next highest is Intel at 0.28. Busy. Sorry. Intel has got a high correlation with Sprouts Farmers at 0.48. I mean, it's a real mixed bag, but I'd say your average. I think your average correlation is 0.2, which is pretty decent.
All right. So what does it mean, this correlation, with my portfolio then?
So, for instance, if you own two oil companies and
Did you include JD in it?
Yeah, so JD,
Marine Max, Asbury.
JD's got a 0.32 correlation with Tencent, which is it's not great, but it's not terrible. But Baba, that's quite interesting, 0.14, which is really good. So with correlations, if your portfolio has really high correlation, as like an average, then that means if something really bad happens, you've got a lot of risk, and it's taking your whole portfolio into account, which is obviously what happens with ARK and VEST, because of the correlation between them. Yeah, low correlation is perfect, because obviously it means your downside risk is minimal, but obviously you're not hitting your potential rewards. And this is what's beautiful about it, because there's not many free lunches in investing, but this is basically a free lunch. Increasing potential rewards for increasing risk.
So in terms of risk in my portfolio, what would you say? Is it going to be like an arc where it's going to come down? Is it good? Is it okay? What is it?
Your biggest risk is obviously going to be with. Hang on, let me get your portfolio up again.
Mm-hmm.
Right. Split screen. So if we take your biggest risk is obviously going to be Alibaba and Tencent, because obviously combined that makes up 39% of your portfolio.
Yeah.
Of 0.6. So that's probably your biggest Achilles heel.
Mm-hmm.
Now, your portfolio is really, really strong in terms of correlations, like not really weak in terms of correlations, rather, which is extremely good.
What? Say that again.
So, like the rest of your portfolio,
Mm-hmm.
Alibaba and Tencent,
Mm-hmm.
35% of your portfolio, not 39.
Yeah.
Your portfolio is really weak in terms of correlations, which is good. Which means if something bad happens to one of them, it's not going to drag everything down.
Mm.
Because correlations are weak. E.g., you have got 2 oil companies, and the price of oil drops, then they're both going to drop because you don't have them.
All right then. Okay.
What I can do, I've got to learn how to do the coding for it because I'm doing it on MATLAB. But I'm creating a heat map, which means it's like a visualization. So the high correlation, it will stand out more in a projection. So what I can do next time, I could do that for your portfolio. I can also do it for Infosys and mine, and then we can just have a look at that.
That'd be cool, yeah.
Yeah, that would be very good.
It wouldn't take me too long. But once I figure out the code, and I can do that for my dissertation, then I'll do it for you guys.
Then. So yeah, you're gone.
Oh no, I was going to say.
Oh yeah. So with my portfolio, obviously, it's the Baba and Tencent, but other than that,
it's really solid. Nothing particularly stands out for me. I mean, you've got some really odd ones like Intel and Sprout Farmers has a correlation of 0.48 in the past 36 months, which I don't understand why it does. Like, that's the thing, it can literally just be coincidence. It doesn't necessarily mean they're correlated. Like, there's no correlation there, if that makes sense. It's just, that's how it's happened. So sometimes you have a high correlation, but it's not necessarily something to be worried about.
Mm-hmm.
Unless you're ARC.
Yeah.
Unless you're going to get fucked. It was so difficult for me today. I was trying to find out the former holdings of ARC throughout the years, and like it is so tough.
Oh, really?
Like the data's not there.
Because the sales further and trying to
They
get them.
sell so much. You know, they used to own Baba, Baidu, JD. You know that?
I knew they owned Baidu.
Yeah, they used to own. Yeah.
One thing I thought was funny was we owned Coinbase at the IPO, and that one, well, I think it's down like 60-70% now or something. I'm not knocking Coinbase, but I'm just knocking that we bought an IPO. So
Yeah.
usually a bad idea.
Yeah, and the thing is, right, I actually have a video. Cathy Wood said she would not buy an IPO, then 2 weeks later she bought Coinbase.
Oh.
And that's I'm trying to log into my Twitter. Okay. So I want you to check the correlation of something for me. It's quite long. I think it is long at least. Okay. Because let's see.
What is it?
Twitter. Okay. Okay. Let me just try and find you got bookmarks.
Send me links for the website I use.
That's the same website that if I swear I've used that website as well, Josh. Yeah. Can't seem to find it in my words.
I seen that you own ASOS, Wes. Have you thought about owning Boohoo at all?
I mean, Boohoo is literally deep value. I was thinking just do 5% each, and that's it, or something like that.
Yeah, I'm thinking about doing a video on Boohoo and ASOS because they're both, in terms of UK stocks, they're quite popular. So I'm thinking about doing a Boohoo one. I don't like retail, but I'm still gonna, because the price has collapsed, I still might have a look at it. Yeah.
Okay.
I've also sent you both the Ray Dalio's Holy Grail explanation.
Okay, here's the list, Josh. All right.
Could you
Okay.
read me out the ticker symbols and then I can just type this straight in?
Okay. Some of these they don't have the ticker symbol, unfortunately.
Do you know what they are?
I could quickly search them up. So this one. Okay. First company. I hate when they don't have the ticker symbol.
Yeah, Ray Dalio's Holy Grail is really interesting. He goes even further with like commodities and gold, precious metals, bonds, all of it, doesn't he?
The difference is Dalio owns hedge funds. I think that's Wall Street. So
Yeah, it's biggest hedge fund in the world, actually.
Yeah. A hedge fund goes to make sure it doesn't make money.
Yeah,
It goes up in the direction. So that might not be a particularly great strategy, young, and you want to take on that risk.
yeah, bonds are horrible.
Bonds. I like the idea of gold, but
Doesn't earn a return. I do own a small sliver, but I wouldn't want 20% in gold. Let's just say that. I own Bitcoin. I can't talk.
He broke that news to me last week on the live.
I'm going to be banned from the live. I bought £100 worth in March 2020 when it collapsed, and that's all I've bought. I don't plan on buying anymore, but it's done all right since I bought it. But I don't personally believe in any other cryptos apart from Bitcoin. But let me just say, I'm not one of these who's like, oh, Bitcoin to the moon, Bitcoin, all the portfolio. I own a small sliver, and that's it. I'm just leaving it like that. But yeah, don't judge me too much.
Okay. The company. The first ticker symbol is OHDD. No, actually, I lied. It's AYX. Okay, then this one's Boston, Omaha. EOC. Next one's Beyond Me. I think that's BYND.
Tattooed chef.
Luckily, that's not on there actually. Desktop metal.
Tattooed chef is.
DM. Wish. Yeah, that's the ticker symbol. WISH. Fiverr, which is FVRR. GLBE. Yeah. JMIA.
Jumia.
Yeah, I used to own that. You know that?
Did you actually?
Yeah. When I first started investing, I bought it.
Is it the African
$6.
Amazon?
Yeah, I first bought it at $6, sold it at the top, or near the, not exactly at the top, but I sold it before the euphoria came down. Made money on that.
I said I have to put it on battery again, so if you're quick.
Okay, Lemonade, which is LMND.
Got that.
UPSD.
Yeah.
Let's do SOFI, SOFI. I think that's a ticker symbol.
Any more?
And then we can do one more, Virgin Galactic. So isn't space?
Yeah.
Yeah.
EP6.
Yeah, let's do those. What's the correlation in that?
Is this ARC?
No, it's a portfolio someone chose on Twitter. All right, let me tell you something quickly. So those are some of the companies. There's more. There's like companies like Open Doors and Yeti Holdings and some weird companies. This portfolio is down 55%. And yeah, so yeah, what's the correlation?
I'm going to send it to you now because my phone's about to die, so I'm going to have to move away from the computer. I'll send you a link. I'll send those the same link as well.
Yeah.
All right, there you go. Also, I think I'm going to have to shoot now because I've got dissertation work to do.
All right then.
All right, nice talking to you, lads.
All right then, see you later.
See you later, mate. Bye-bye.
Yeah.
Cheers.
Okay. So what now, Lewis?
What we're looking at, the correlation.
Yeah. Did he say he's going to send it?
Yeah, I've got it up on screen here. Yeah.
Right then.
The return's down a lot.
Yeah. Well, you got it. Okay. Are you able to put it in the chat, the link? Or is it on your phone that you got it up on?
Oh, I've just got it on my MacBook.
Okay. I was going to say put it on the StreamYard.
Oh, I don't know how to do that.
Oh. No, I mean post it in the chat so I could pull it up on my screen as well. Yeah, the link, yeah.
There we go. Should be there. Whose portfolio is this anyway?
So I can't say the name. It's like this person's like, high profile and
Oh, really?
yeah. But I'll tell you what the tweet was. This was in July 2021. I asked what company is worth less than 10 billion today, but you think could be worth 500 billion in a few decades. I have received 710 answers. Here are my top 20 stocks that have 50x potential.
Brian Feraldi. Isn't it?
Yeah.
Yeah.
Oh, you see that post?
I've seen the tweet before. Yeah.
It sounds
like a Brian Feraldi tweet as well. So yeah, he doesn't believe in valuation. I don't know if you knew that, but
yeah. Josh was telling me the other day. I mean, yeah, valuation don't matter, but I was like, come on, man. And yeah, I mean, Twitter's a ruthless place. Like they'll dig up the tweets and clown you for it. And I saw that tweet, and a lot of people are really, it's literally like memeing it kind of thing now. And
all of them companies are shocking.
Yeah, like
they're so bad.
The portfolio is down 54% in
permanent loss of capital.
Basically,
to come back from that, wow.
Yeah, and Wish as well. Wish, Wish, they sell like counterfeit items and stuff like that. And
they need a Wish to get the capital back.
Yeah. And then SoFi, that was like a social media company that everyone.
SoFi, wasn't that like a Bitcoin-y thingy or something? I don't know.
It was like,
They named a stadium. They named LA Rams Stadium after SoFi. American football. But yeah,
But SoFi, it had the perfect retail story to attract retail. Like
literally.
the app was mainly for like millennial Gen Z kind of, people. And yeah, I could see why a lot of retailer love that company, but the stock is down like 55% or something.
Shocking.
Mm,
Not good.
no. Uh,
Yeah.
but yeah.
Yeah, interesting. Yeah, I think we're gonna have to shoot anyway.
Yeah, done a pretty long one today.
Quite a long one, yeah. No, it's been good though.
So
So
yeah.
yeah. Anyway, yeah, we'll finish it up here.
Yeah, thanks for watching. And when we're not doing next, I will do next week because you said
You could do next week, but we're gonna rebrand it, aren't we? We're gonna do it more of a podcast style.
yeah.
So we'll focus more on the YouTube / podcast bit, but we can have our live going at the same time, I guess. We could just have the phone at the side whilst we do the podcast for like YouTube. So I think that's the best way to do it.
Yeah, I agree. Yeah, definitely. But yeah, thanks for watching. See you guys next week, and yeah, have a nice day. Anything else you want to add, Lewis?
Nice one, yeah. No, thanks for watching. I'll see you next week.
Right then, bye.